Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 20th, 2026, and we're diving into Targa Resources' latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Targa Resources has just released their fourth quarter and full year 2025 financial results, and there's a lot to unpack, especially with their record-breaking performance and strategic initiatives in the Permian Basin.
Revenue and profitability overview. Let's start with the top line. Targa Resources reported a net income of $545 million for the fourth quarter of 2025, a significant increase from $351 million in the same quarter last year. John, what are the key drivers behind this impressive growth?
Absolutely. The increase in net income is largely driven by higher volumes across their gathering and processing and logistics and transportation segments. Additionally, Targa's adjusted EBITDA for the fourth quarter was $1.341 billion, up from $1.22 billion in the previous year, reflecting strong operational performance and cost management.
And for the full year 2025, Targa's net income reached $1.923 billion, up from $1.32 billion in 2024. How does this set the stage for their future growth?
For the full year, Targa's adjusted EBITDA was $4.957 billion, a 20% increase over 2024. This robust performance is a testament to their strategic investments and operational efficiencies, particularly in the Permian Basin, which will continue to be a growth engine for the company.
EPS forecast and analyst expectations. Now, let's talk about earnings per share. Analysts had forecasted an EPS of $2.37 for Targa Resources, and the company met these expectations. John, what does this tell us about Targa's financial health and market positioning?
Meeting the EPS forecast of $2.37 is a positive indicator of Targa's financial health and operational stability. It shows that the company is effectively managing its costs and capitalizing on its strategic initiatives, particularly in the Permian Basin, to deliver consistent results.
How does this alignment with analyst expectations impact investor confidence?
When a company meets or exceeds analyst expectations, it generally boosts investor confidence, as it suggests that the company has a clear understanding of its business environment and is executing its strategy effectively. This can lead to a more favorable market perception and potentially drive stock price appreciation.
Strategic initiatives and growth projects. John, Targa Resources has been quite active with strategic initiatives and growth projects. Can you elaborate on some of the key developments?
Certainly. Targa completed the Bull Moose II plant in the Permian, Delaware, and acquired Stakeholder Midstream for $1.25 billion, which are significant moves to enhance their operational capacity. They've also announced new projects like the Yeti II plant and Train 13 fractionator, which are expected to drive future growth.
And how do these initiatives align with their financial outlook for 2026?
Targa estimates their 2026 adjusted EBITDA to be between $5.4 billion and $5.6 billion, reflecting an 11% increase over 2025. These strategic projects are crucial for sustaining this growth trajectory and enhancing their market position.
Capitalization and shareholder returns. Let's shift our focus to Targa's capitalization and shareholder returns. What are the highlights here, John?
Targa's total consolidated debt stands at $17.433 billion, with a strong liquidity position of $4.1 billion. They repurchased $642 million worth of shares in 2025, and they're planning a 25% increase in their annual dividend to $5 per share in 2026, which is a significant commitment to returning value to shareholders.
How does this financial strategy impact their long-term growth and investor appeal?
By maintaining a strong liquidity position and increasing dividends, Targa is not only reinforcing investor confidence, but also ensuring they have the financial flexibility to pursue growth opportunities. This balanced approach is likely to enhance their long-term growth prospects and attractiveness to investors.
Key takeaways. In summary, Targa Resources has delivered a strong performance with record net income and adjusted EBITDA for 2025. Their strategic initiatives and financial strategies position them well for continued growth in 2026. John, any final thoughts?
Targa's focus on expanding their infrastructure and increasing shareholder returns through dividends and share repurchases is commendable. Their outlook for 2026 is promising, and they are well positioned to capitalize on market opportunities.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Targa Resources' performance in the comments below.